Okay, MegaWhale team, welcome back to the channel. Thanks for tuning into today's video. We're going to be taking a look at Bitcoin today, diving into the chart, talking about the recent price action, talking about the breakdown from the neckline. Obviously, we have FOMO coming up soon, and we've had some, recent earning reports from some big companies in the US on the S&P 500, which has resulted, in this period of volatility, which was expected. We definitely expected volatility, and we, although we had this rapid move upwards, we weren't overly bullish or expecting anything more until 23,800 was broken on the daily. That was that key trigger. And if we go ahead and just quickly zoom back outwards to show you that that area was acting as that major resistance zone that we had to break above to see this next move upwards. That next move upwards taking us to 28. Okay, that is still remains, that is still very much in play. If that plays out, we do expect that. Until then, obviously, we are not looking too amazing. We're not looking too good here. Obviously, the charts are looking quite bearish again. We have broken downwards from our descending channel formation, our bull flag formation. Obviously, this isn't a good thing. There's a chance the price will re-enter. But more importantly, guys, which I do want to talk about today and bring to your attention, is this downward trending diagonal resistance zone. Before we get into anything, head down to the link below, join our Telegram channel. You'll get access to a range of different things. We do daily updates, market analysis. We have all our videos in here. And if you're interested in accessing our VIP channel, you can contact me directly by just going up here and sending me a message to get access to our VIP. Let's go ahead and talk about what's happening. So we talked a little bit in the intro there about, what's kind of happened. And let's talk about this descending dotted resistance level, because this is a major zone that we've talked about a lot on this channel, leading up, over here, leading up into this massive breakdown, and again leading up into this rally back upwards. This zone facilitated a lot of that move. So let's zoom out. This dotted trend line has acted as a very strong and very relevant major downward trending resistance and support zone for the course of about over a year for Bitcoin. And we've seen some significant bounces and rejections from this zone that has facilitated these aggressive moves upwards, as well as these brutal drops down, which we've seen on a few occasions. We've noticed that when we lost this level over here in May 2021, we had this aggressive drop downwards, and that was just one component of which caused that drop, but that was still a component. Later on, forming this base level of, descending diagonal support, which we found 2 retests, a 3rd retest, a 4th retest, and then finally losing that level, sending us all the way down through this major support zone, down into the next lower support zone, which turned out to be that 18K uptrending support line. So recently we've closed a weekly candle underneath the 200-day moving average. We talked a little bit about that yesterday. We talked about, what that really means to the price, what it means in general, what does a moving average mean in general, and what information can we derive from that. So looking at the chart over here, of course, we have some significant levels. Of course, 20,770 is a significant level, because at that point, this candle, this previous 7-day candle will be engulfed. It will be engulfed. The price is sitting currently at $21,070. Okay, so that level there, which we want to keep an eye on, is 20,700. Let's go ahead and zoom in. Where does 20,700 line up to? 20,700 coincidentally, or not coincidentally, lines up with underneath this downtrending dotted support line. So if we lose this downtrending dotted support line, we are looking at a cascade effect that will most likely take us back downwards. And where is our lower target? Well, we've had support here, we've had support here, we've had support here. We can only assume our lower target again will bring us to this level. Now, we do expect a bounce from there, but however, if the price does fall through, and this is a possibility, knowing that FOMO is coming up, knowing that we have economic data releasing that is proposed to be bearish or expected to be bearish, okay? Obviously, the economy is on a good spot. We can expect there is a possibility that the price will crash below here. And of course, if we lose this level, we end back up in this major support resistance zone, okay? So I was talking a little bit earlier today about, how the macro outlook looks. And if we eliminate economic news, if we pretend that stuff doesn't exist just temporarily while analyzing this chart, technically, while we're above support, we are above support, and therefore support remains support. You should anticipate support to remain at support until lost. And therefore, everything on the upside here The move over 23,800, which will lead us into a nice uptrend on the short term at least, is still in play until we close a weekly candle below this major uptrending black support line, okay? If we close a weekly candle below that trend line, we have lost this uptrending support line, which has indicated the bottom for Bitcoin on potentially 3 occasions now, okay? Now, we do have the 300 SMA acting as major support. There's a possibility we come down and bounce and push back upwards. We've talked about that already, okay? The whole point of today's video, guys, is to make everyone aware that, FOMOC is coming up, volatility is expected. This is what that macro outlook is looking like. Don't get too caught up on the short-term price movements. Be aware of what they mean. But as for a macro direction, zoom out a little bit and look at the bigger picture. Technically, nothing has changed since we were, like 4 days ago at the same price point, or 5 days ago at the same price point. We're still at the same price point. Nothing's changed from a macro structure because no major structures have been broken or lost yet. All that's happened is we pushed up into this next major resistance zone where people got overly bullish, got overextended on longs, and then we crashed back down. That's it, we got rejected. So yeah, rejection is important, of course, but it hasn't broken any levels. We haven't flipped with a bullish confirmation yet. There's been no bullish confirmation or bottom reversal yet. Again, we need to break that level for that bottom reversal confirmation. But in saying that, there's been no bearish continuation either. We're still in this very much neutral sideways pattern. And while we remain in this neutral sideways pattern, we should be aware of all scenarios. Okay, so trigger points, $23,800. If we trigger and break over a daily candle of $23,800, we do expect a move back through this low resistance range up to about $28,000, okay? We will see some kind of move like that, okay? We do expect that to happen. Now, if we lose this uptrending black support line, which we talked about on the shorter time frame, we do expect a move back downwards. It's the same thing, we just flip it, a move back downwards into this range here, okay? It is simple as that. Now, I don't want to give too wild predictions. I'm not here to tell you what's going to happen specifically today, because at the end of the day, with economic news coming out, we really don't like to trade too heavily into economic news. It's really hard to say for sure what's going to happen because, again, a lot of what will happen is based on information we don't have available right now. A lot of this price action right now is based on information that we just don't have available right now. It's anticipatory. It's in anticipation, okay? So it's hard to say for sure. And that is why the best course of action right now is if you have low risk tolerance, don't trade. If you have risk tolerance and you can afford to take a risk, look to enter on major areas of support. Look to buy supports, okay? And look to short when these supports break and just play each little move, one move at a time. That's how you should be doing it, all right? Don't look at the macro and trade based on the macro right now. Trading on the macro right now will get you wrecked. You might win, you might lose, but in most part, it'll get you wrecked because the macro direction is still not entirely clear. Not entirely clear. Technical indicators, more bullish, but again, they haven't accounted for this recent move down on a large time frame yet. They're still catching up. They're still lagging. They're still accounting for this upward move. So a lot of people, again, are going to get overly bullish looking at larger time frame technical indicators, thinking, oh, technical indicators are bullish. I must be bullish. The price must be going up. And yes, that is a possibility, but it's lagging. It hasn't taken into consideration this recent area of volatility or this drop downwards yet, okay? So remain cautious, sitting on your hands. Sometimes sitting on your hands is the best decision you can make as a trader. You don't have to be in the market 24/7. Of course, it is good to be trading most days with small capital if you don't feel comfortable, okay? You do not have to trade with large capital every day. My personal capital that I trade with most days, ranges from like 5 figures. Sometimes I trade in that, only $1,000, 4 figures. Sometimes I'll trade with 6 figures. But most of the time in the last week or so, I've been trading, on the lower spectrum of my capital, 0.1% of my portfolio, if not less sometimes, okay? Remain cautious, remain calm, be patient. We'll have an update with FOMOC soon, and we'll have a more clear understanding of what's happening with the price action, and we'll be able to give you guys a little bit more of a detailed analysis in terms of what's happening on the short term. Because if we think about the macro, if we think about this area here and this area here, everything above here, we have a plan for. Everything below here, we have a plan for, okay? The breaks on these triggers, we have a plan for. We've talked about it. It's just kind of this range between these levels that is getting a little choppy. It's getting a little speculative. It's kind of hard to predict exactly what is going to happen with certainty until we get one of these directional breaks, okay? I'm going to leave it there, guys. I hope everyone has a fantastic day. Whatever you're up to today, try, relax, enjoy it. Don't get too stressed about with the upcoming economic news. There's really no point, guys. And we'll catch you in tomorrow's video. Okay, I'll see you then. Okay guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you're a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, could name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.